final session of the day, and that's the most exciting time to be in insurance. I said we were finishing on a high. How digital business models and technologies can propel growth for our industry. So a lot to get through there, and this is with our guest Niki Kouri Maglaras, Chief Digital Officer at Prudential. Hi Niki, how are you?
I'm great. How are you?
Very good, thank you. We've had a fantastic day so far, fantastic interaction from the audience, and you have the pleasure of finishing the show for us today.
Perfect. And I had the fortune to join some of the sessions as an audience, and I concur with you. Very, very fantastic speakers and great content so far.
Very good of you to say so. Well, let's finish on a high. The floor is yours.
Okay, no problem. So I had actually asked Nova where the insurance industry was headed. And this was powered by ChatGPT, and she was giving a very succinct answer to that question. And this was Nova, one of Soul Machine's interactive, self-animating, GPT-enabled digital people. And I'm Niki Kouri. As you said, I'm the Chief Digital Officer of Prudential Financial's International Businesses. Now, the insurance industry has a 350-year history. Digital transformation has an 80-year history. You heard that right. Not 5 years, not 10, not 20, 80. Yet now is the most exciting time to be in insurance. I believe that understanding the evolution of technologies and their impact on insurance over time will better prepare us harness their potential in the future. That's why I will go back in time and show you how these technologies have affected our industry. So where and when did digital technology start? Let me give you a clue. What do Bruce Springsteen, Prudential, and digital transformation have in common? Yes, they rock, and they all started out in the state of New Jersey. Digital transformation started at the Bell Labs in New Jersey in the latter part of the 1940s with two things: the invention of the semiconductor and the blueprint of what we now call digital communications. And if you think about it, 80 years later, it is really the ability to compute, microprocessors, chips embedded in every device that we have, with the ability for pervasive digital communications that have really transformed our lives. They have transformed how we buy and sell stocks. They have transformed how we bank. They have transformed how we order our food, how we move around our cities. So let's take it one by one. Computing took its time in reaching the scale we see today. It started when John Bardeen, Walter Brattain, and William Shockley invented the first working transistors at the Bell Labs in 1947. All three received the Nobel Prize in Physics for their work. Then one day, Shockley decided to move out of New Jersey to be closer to his elderly mother, who lived in a small town in California called Palo Alto. He founded the Shockley Semiconductor Lab, the first lab to ever work on silicon semiconductor devices. And it took many twists and turns until a few scientists broke out of Shockley Lab to form Fairchild, and then to start a new company called Intel, where they invented the first microprocessor, computer on a chip. And suddenly, things started to become faster, things started to become smaller, and we went from mainframe computers to personal computers in the 70s and 80s that changed the way you and I work today. On digital communications, Claude Shannon described the fundamentals of digital communications, what he called information theory, also in the late 1940s, also at the Bell Labs. And then for the longest time, nothing happened, simply because that was way ahead of our ability to use it. Based on Shannon's information theory, 20 years later, the Defense Department created something called the ARPANET. That was a decentralized communication network that connected military bases for defense purposes, so that if you bomb one, the rest of them can communicate with each other. And that was, as we all know, the predecessor of the internet. In the late 80s, the internet was expanding outside of the military to all academic institutions first, and it was around the same time that digital communications started picking up. And in the 90s, for those in the audience that were alive in the 90s, clearly we all started to experience the internet. And then in the 2000s and onwards, digital communications became pervasive. And these two waves, the ability to compute and digital communications accelerating together, created all the synergies that we are exploiting in our jobs today on a daily basis. And they created something else. They created an explosive amount of data. Think the data you create every time you message a friend, respond to an email, take a picture on your iPhone, upload a YouTube video. A single person creates 1.7 megabytes of data per second. And collectively, we generate 2.5 quintillion bytes of data each day. That is 2.5 followed by 18 zeros. The size of this presentation is approximately 200 megabytes. That means the Apollo 11 guidance computer that sent people to the moon and back would not be able to store this presentation on its 76 kilobytes of memory, which weighed 66 pounds. Compare and contrast with your iPhone that has 500 gigabytes of memory and weighs 6 ounces. Now, large-scale data sets can be analyzed by increasingly powerful machine learning algorithms to segment markets and personalize recommendations. For example, each of us may be participating to dozens of A/B tests in the news feeds that we see, the layout, design, and text of messages that we receive. Even the online newspapers that you open in the morning thinking that you're seeing the same headlines as the person next to you may not be the case. All said, an algorithmic economy is rising and rides on the interplay between software, data, and algorithmic decision-making. In the last 10 years, we're moving fast from statistical learning algorithms to deep learning, also known as neural networks, with applications initially in image recognition and lately in large language models. Simple applications of neural networks in image recognition are everywhere. If you have global entry, you used to come to the airport in the US, you could put your passport face down, maybe key in a few data. Now you don't even have to even reach for your passport. Your picture is taken as you walk through the airport, and you can just move past all checkpoints. And now we have ChatGPT, and there we are surprisingly caught by surprise because somehow we were not internalizing the existing applications of artificial intelligence all around us today. Our ability to compute in my professional lifetime has improved by a factor of 1 billion. Not many things have ever improved by so much in the span of 3 decades. At this point in time, the amount of calculations you can do per dollar doubles every 2 years. Simultaneously, the amount of data is doubling every 1 year, and the size of the brain, essentially the number of parameters you can train in a neural network, is doubling every 4 months. So the brain you're training is getting exponentially bigger. You can train it by using exponentially faster computers, feeding it with exponentially more information. So things are happening, and they're happening fast. And they will change all facets of life and work, across country, across industries, including our industry. The CEO and friend, the CEO of the insurance aggregator Policy Genius, who is a friend, Jennifer Fitzgerald, reminded me of the Ernest Hemingway quote, "Gradually, then suddenly." In our industry, 5 to 10 years ago, we started realizing that insurance is being gradually, we thought, disrupted. And then with COVID, it was suddenly abundantly clear that we needed to double down on investments in digital and innovate across the insurance value chain. So let me take you through the strip of our value chain, starting with generating leads. Early insurance was anchored on specific customer segments. People seeking insurance were part of communities, societies, or professions. And through word of mouth, referrals, and those early black and white Prudential advertisements, insurance would be sold. Fast forward to today, attracting customers at scale is a very hard thing to do. There's the issue of low awareness, the issue of adverse selection, and also the issue of affordability. And that's why finding the right customer at the right time is a very difficult thing for insurance. And today, insurance remains one of the most expensive keywords in Google search. The industry, of course, has moved swiftly to increase its market reach, and digital transformation has enabled targeting those most desirable customer segments to insure. And we are reaching today customers across social media, search engines, partner sites, affinity partners, email, SMS, WhatsApp. But AI is undoubtedly poised to further revolutionize digital marketing, from AI-powered search algorithms to improving keyword research and content optimization. I think we also will see enhancements in user experience powered by the advancements in AI, predictive SEO, voice search optimization, and visual search optimization, further transforming the way we optimize our online presence. Now, moving to distribution. Distribution is key, of course, to all types of insurance, but especially life insurance. At the dawn of the modern era of life insurance, distribution relied exclusively on the human touch. Agents would go door to door, not only to sell insurance, but also to collect the premiums that were often billed weekly and were often as low as 3 cents. Today, at Prudential, we are moving to what we call the hybrid digital agencies by empowering our agents with mobile-first technologies, allowing them to prospect potential customers, engage them remotely or in person, and guide them through a deep, detailed, and comprehensive financial needs assessment powered by AI algorithms, all the way to the issuance of the policy, all within a single end-to-end app on their iPad or on their mobile phone. Now, for accident and health, among other types of insurance, end-to-end online purchase is desirable, effective, and efficient. Think adding a travel insurance coverage to your existing insurance completely online, like this acquisition journey starting now, where a Prudential travel insurance product is purchased in Brazil in less time than it will take me to get off this slide. This particular experience is a very good example of how you can increase the distribution reach by tapping into an ecosystem of affinity partners with an embedded purchase experience, and how you can also create hybrid experiences by allowing users to select to be connected to a live person at any point of this journey. Now, on to service. Probably the biggest area of application for natural language processing and deep learning algorithms that learn the structure of the language, can understand what we're typing, even if we make 17 typos in a row. They synthesize text that answers the questions we pose. They sound human, and they keep learning from these interactions and dynamically add new intents to their lexicon. And what you're seeing playing here is the interaction between a Prudential customer in Indonesia and the AI conversational assistant Melly on WhatsApp. Not only can we take care of all requests, like give me the status of my claim, get me my policy contract, let me pay my premium, but we could also offer service to sales capabilities where you can move from self-service to talk to an agent and or buy a policy online. And digital people like Nova that you could not see in the beginning, but digital people on the right, which combine animation technology with large language models, give a highly personalized, empathetic digital experience that not only sounds human, but also looks human, and also mirrors your emotions through the camera and emulates the same facial expressions, or at least tries to tailor its response and its facial responses to what you're feeling, what the customer or the other person at the other side of the camera is demonstrating. And this is a new frontier, and it's already gaining traction in service. And now to the math behind the insurance product. Early mortality tables relied solely on age, and they were the basis of underwriting for an awfully long time, from the dawn of modern insurance 300 years ago until the 1940s, when gender was introduced as an underwriting criterion. So that took a long time. In the 70s, then, insurers differentiated between smokers and non-smokers. And then the emergence of blood tests is quite recent. It was the emergence of HIV/AIDS in the 80s that saw the blood test being introduced and being standardized into underwriting. Today, Most of the insured portfolio of any particular company is walking around with smartwatches tracking their steps, heart rates, and activities. Cars are able to monitor driver performance. Drones fly over fields interpreting the health and yield of crops. And we're able to capture all this information remotely. We're able to capture it in real time, incorporate and interpret it through sophisticated data modeling and those powerful algorithms we were talking about. Now, underwriting has been built on data, and data records of what happened in the past. One can take, however, the portfolio of data, model and analyze it on a forward-looking basis. In 2020, 10,000 wildfires burned through California, charring 4.3 million acres and wreaking $19 billion in losses. Choate and Vantic worked with NVIDIA to build a generative AI tool that helps get the jump on wildfires. Emergency responses are delayed by false positives from existing wildfire detection systems. This tool reduced false positives from 2,000 to 8 per week. Now, for many years, insurers have been capturing fitness data among their insured populations and using it as reward points or premium discounts. Next generation technology will go beyond fitness to health trackers, providing underwriters with a dynamic view into past health status and the ability to monitor current health real time. And we know that consumers benefit from solutions that improve their physical, mental, and financial wellness. It is expensive to recover from poor health, and poor financials can lead to mental and physical sickness. Intertwined wellness solutions are primed for leverage by the insurance industry and can be included in the insurer value chain primarily through digital partnerships with wellness companies and startups. And that's what we're doing at Prudential with our application called Fully, a wellness app across the 3 pillars of wellness: physical, mental, and financial. And this is important because it's a way to continuously engage the customer, a concept that has been eluding modern insurance. The idea is to use a total wellness app to monitor physical activity, measure steps and heart rate via smartwatches and smartphone apps, and to change behavior through incentives and goals, making people healthier and more protected. Same concept applies to financial health. Know where you stand vis-a-vis your financial goals, receive personalized recommendations to achieve your goals, and be rewarded for taking the necessary actions. The combination of valuable content, targeted recommendations based on real-time behavior tracking, and rewards incentivizes consumers to lead physically and financially better, healthier lives with obvious benefits both to the consumer and to the insurance company. Now, bringing it all together, from lead generation through product distribution, underwriting, service, and ongoing engagement, we as an industry are making great strides. Now, there's a more ambitious vision for the future, and I'm going to use as a background here MoMA's AI installation. That's the Museum of Modern Art in New York City, and this is one of the permanent installations. So I'm using this for inspiration for all of us, that AI can be creative. So the ambitious vision for the future is a vision of one insurance, not separate product-centric insurances. One dynamic and highly personalized insurance that changes over time to fit consumer needs triggered by big things like a birth of a child, retirement, as well as smaller things like getting on a plane, speeding on the highway, getting a pay cut. So you have one insurance scheme, optimally configured and priced, where you get pulled in a risk category of 1 yourself, priced for what you can afford, that optimizes protection on as many risks as possible, and that changes dynamically as your circumstances change. This vision, technologically, is possible today. We have the existing technology for that. And it will only get easier, faster, more animated, and more personable over the next few years, with the only question being, how quickly can the industry move towards it? Thank you. I'm free to take any questions you now have.
Niki, thank you very much indeed. That was a lovely way to finish it, showing the creativity of AI there as well. It's very easy to think of it as very robotic, but no, that was a beautiful way to finish. And your question about how fast the industry can move, I'm going to turn that right back round and point it back towards you. How fast do you feel the industry can move to be able to make these changes to that truly personal service to a customer?
Yeah, I mean, I posed the question and now you're very smart, you're posing back to me. I wish I had the perfect answer. I think what we're seeing is incumbents will need to move fast because InsurTechs are moving fast and technology firms are moving fast. It's hard, and we all know the arguments from incumbents about cannibalizing revenue, but the fear of actually cannibalizing completely yourself is very vivid. And that's why we see a lot of dollars being and huge investments being done by incumbents. So I think the insurance industry as a whole is being pushed to act fast. And I think the way to do that is by embracing what we sometimes call the frenemies, InsurTechs or technology partners that sometimes are our friends and sometimes we're our competitors. And I think and that's what we're doing at Prudential, by picking the areas where we want proprietary technology or proprietary experiences and working on those, but then augmenting our offerings with partners out there, whether they're technology or InsurTech companies, that will actually propel the growth and will help everyone, the individual companies and the industry, move faster.
Because I think your presentation wrapped up beautifully the speed of change there has been in the industry, from the very human knock on the door touch to apps, the internet, and very personalised service. The personalised service is the way forward, it is the future, but do you feel we're only scratching the surface of the potential of that particular kind of technology?
Oh, absolutely. Absolutely. I think personalization right now is in most cases restricted to getting those ads and getting that content right to initiate an acquisition journey, which in itself is valuable. Don't get me wrong, especially if it's at the moment where you are looking to purchase insurance. So it does basically meet a need you have at the point. But I do think we are scratching the surface. I think AI recommendation tools that, as I said, dynamically and over time assess your needs based on real-time data that you have consented to give, so that either an advisor, an insurance agent, or online, we can push content, we can push recommendations and offers that catch you at these moments of truth. I think that will be valuable, very valuable to the end consumer. And I think we're scratching the surface. I think with AI and with Gen AI, I think you're seeing a lot of people making some strides and putting some great and thoughtful tests out there. I want to single out Morgan Stanley. That is, in fact, putting Gen AI, producing content from existing content they have to their 16,000 financial advisors. And that helps them, meet the needs of the customer by harnessing all this intelligence they have accumulated over years of dealing with consumers. And I do think at insurance, I think these will be some of the tests that we should start doing with proprietary data that we have, over 100 years of data on our consumers and understanding of product offerings. I think that'll be a great and safe test of Gen AI to give some of this content back to our advisors and our agents to be able to best personalize the recommendations and the service they give to our customers.
Now, Niki, we are having a brief flood of questions coming in for you from the audience, so I will rattle through those as quickly as I possibly can, as we are nearly up to time. First one from Palvinder. Hi, Palvinder, thank you. How do we ensure data quality in ensuring Gen AI is useful in insurance?
Gosh, yes. I mean, the data quality is a very good question. I would say in the beginning, I think, as I said, I would restrict the recommendations to internal data as opposed to going out to the internet. As we know, some of the data already is up to 21 or 22. So it's already dated. I'm sure that's going to be refreshed soon if it's not already. So definitely the data quality when you go external will be something that we have to build data governance around. And there are conversations across the board around AI governance anyways. So that will be handled, I believe. But I think I would start with internal data. And even there, we still have problems with data quality even with our data. We have a problem like getting all our data in one place. So I can talk about what we've done in the international markets of Prudential. While we were driving the car, we were building, we were putting the wires, the tires and the wiring and the engine as we were building the customer experiences. And that basically is building those data lakes in the markets where we operate and putting all our data in one place, cleaning up our data, putting data governance over it so we can harness the intelligence and make it show up as insights into our customer experiences. So to answer your question, data quality starts at home, and it starts with putting all your data into data lakes, making it as clean as possible, as usable as possible, and then serving it up with Gen AI and with other more, conventional, if you want, analytics methods, serving it up not as an ex post insight, but something that you operationalize within the customer, within the workflow of your agent, within the purchase experience or the service experience of your customer, and make it operational.
And finally, one last question from Tati. I hope I've pronounced that correctly. Do you see a big gap in implementing some of these ideas into different markets, such as third world countries, for example?
Interestingly enough, some of these technologies are faster being implemented and adopted in some of the emerging markets. And of course, I'm biased because I work in emerging markets, but I have to tell you that when we go to Indonesia, I mean, definitely China, and you look at India, you look at Brazil, you look in Mexico, I think it's the story of some people not having the pipes for more advanced things that we used to do 10 years ago. So they have to leapfrog and go directly into innovation. So if you look at how conversational AI is used, those chatbots in WhatsApp, I mean, it's used extensively, or buying online. You also see, not just in insurance, but you see digital banks emerging at a rate and at a maturity that sometimes you don't see in the US. So I would say emerging markets are in many ways informing what we do in the US.
That's a fascinating insight, Niki. Thank you so much. Thank you so much again for closing the show here at InsurTech Live.
Thank you.
Thank you very much indeed.